Okay, so let's jump into it. So it's a little bit later actually. It's what are we at? 10 o'clock on the Sunday night. So yeah, a little bit later over the weekend, but yeah, still gives you a chance to have a look over sort of what's happening with the charts. I'll make this one a little bit bigger. I'm on the road at the moment, so screen is a little bit sort of compacted, but that's all good. So look, sort of start off with DXY because yeah, we had that core PCE come out on Friday night, which I do believe sort of came in just a touch lower than was expected. And obviously, we were already seeing that DXY sort of selling off, coming down through this period over here, um, sort of leading into that sort of data coming out. So this was like around the Thursday night. Obviously, had that little bit of a push up early. And we can probably drag this just a little bit higher up over the top over here. And you can see that this is the bear flag that we were kind of trying to sort of trade through. And as you can see, pretty much came down full completion, just in line with the previous weekly wick lows for the weekly. So it seems to have sort of bounced back up, sort of coming into sort of like, last couple of hours, not the full last hours of the session, but I mean, this is on a 4 hour. So obviously after that news came out, so if we jump down onto, I have to do this a little bit easier, so 60 should get us a 1 hour. We can see, obviously, this is around the time, 10:30 was the time that the data came out. Knocked back down there, sort of took a little while, but it seems to have sort of bounced back up off the top there. And again, look, it's just respecting those levels. So we've seen that this has been quite a sort of prominent level, sort of like this is sort of open of last week. We could see it sort of as a bit of a resistance zone. It was obviously pretty hard sort of as it was trying to get through then that sort of little midweek pump. And then obviously sort of floated around here a little bit, sort of on its way back down. And as you can see now, obviously onto the lower side of it all, and we can see that sellers also just had another opportunity there and just really clipped that sort of coming into the sort of the last hours of the week. So the fact that you had that measure move complete, that's fine. You've come off a previous area that we know was a bit of a sort of a support area. We saw that sort of, was it Tuesday or so, I think, where we had that sort of rally up from the bottoms there. So yeah, that was a completion. So it's fair enough that you sort of see a little bit of a bounce moving back up into the sort of top part of that. I don't believe it was any sort of, I wasn't actually, I took a bit the second part of that Friday session off. So I don't believe there was any news that sort of drove that back up. But certainly, as you can see through here, we're respecting the chart quite well each time, and obviously sort of knocked it down to the bottom side here. One thing I did notice, though, obviously, is anybody sort of trading it would have seen that gold kicked right up off this little breakout up here. It was grinding up most of the session, so gold's kind of sort of really detached, decoupled from the movements of DXY the last week or couple of weeks actually. So normally they've got that sort of nice sort of inverse relationship, but at the moment they seem to really just be, you know what I mean? Like you get DXY sort of moving up, you get gold moving up. Well, gold hasn't really been moving up at all, but you know what I mean. Through shorter periods, you're seeing DXY go down, you're seeing gold go down as well. But certainly through this last period here, as DXY rallied back up, gold seems to have taken a beating. So I'll get onto gold in a moment, but yeah, we're really seeing gold testing for a bit of a breakdown, and this area through here where we saw DXY sort of rally up to the top, the money was definitely flowing in from the metals, and silver and gold both got hammered from their real little rally attempts up there. So yeah, we'll have to sort of see how we're sort of moving forward with that. So look, interesting sort of levels for here. I mean, look, if we zoom back out, so we go on the 4 hour chart here. Um, so a little bit of technical difficulties with those ones. Let me go back onto the 60 here. And we zoom out. So this blue line down through here is obviously a fairly strong support area that we've sort of seen. As you can see, this is from going back to December last year. DXY sort of respected it, and you can see when it's come into contact with these areas, it's had quite a strong sort of reaction coming off the top side. It's not so hard when you're not on the normal setup to sort of flick back and forward in between these ones. But if we zoom back down into it, you can see that bounce on Tuesday. That obviously offered a bit of a sort of rally attempt for DXY, and obviously sort of, as I said, sort of just coming down the bottom side of it on Friday was obviously also a bit of a chance for a rally there. But what we're really sort of starting to see at the moment. All right, so back, just a couple of technical difficulties there. Yeah, anyway, look, basically, so what we're starting to see now is that it's coming through this support a couple of times. We've got this sort of like falling resistance, which we've kind of been respecting since this drop down through here. It's a bit hard to see, so if we're going to get on to 4 hour. We can see that this was an area in which we were sort of using as a bit of a falling resistance, sort of going back, sort of mid-April. We had that little push up to the top side here, which obviously was just that last little rally up here to sort of, take out some shorts, take out some short stops, drag in some longs, and obviously whack down. But short of that, we've seen it being respected a number of times. It obviously did try and sort of get out of it sort of midweek, but this was really like that flush out. Like we took out all the longs down here, took out all the shorts up here, and then really just sort of closed back in this sort of little tight range. So for me, the fact that we sort of came through that sort of like rising support, and this is like, a number of times, but obviously you saw how far back some of these previous ones were. On the daily there. This will show it a little bit better. So you can see that sort of like, we had the sort of first start of this trend back in December. Took a couple of months up until March to come back there. Took a couple of months again until May to get back here. But now this time we can see that it's really sort of coming to a bit of a pinch. This shows that little falling resistance that I was talking about a moment ago a little bit better. And we're really coming to a bit of a point of this little triangle through here. And so I think sort of certainly, we're going to see a bit of a break this week. We do have a bit of news sort of coming up. I don't know if I don't think it's this week, maybe the week after. We've got NFP coming up this week and obviously ADP with that as well. And then also, I think the week after that, we may have the FOMC as well. So, there's certainly some large bits of news sort of coming up soon. But as you can see, it's getting closer and closer and closer that we're testing this rising support through here. So for me, this little wick that really came down quite deep outside it, excuse me, well, not too deep, sort of like, it's not too bad. What are we at? 36 to 51. So it pushed down a little bit. Did obviously, as you can see, manage to rally up and close inside there. So it doesn't mean that sort of we're committed to that sort of downside move there yet. But for me, another push down out of here, plus taking out last week's wick, we'll see the push down of DXY. Obviously, we've got these support areas through here, which we've seen sort of hold a number of times. It's obviously that pretty much more or less that little rally point from back with the CPI. So that's obviously offered a little bit of a bounce area as well. So they're the two levels that I'll be looking at this week. I'll be looking for a break of the last week's wick lows. And then obviously, if we can get down underneath that, then a breakdown of this major area through here. I think if you get under 103.8988, this kind of area here, particularly on a break retest and then subsequent breakdown through there, we're going to see the US dollar meltdown. We're going to see pushes down to 102 because, again, like these sort of things that you see, it's, you've got the confluence of this rising support plus, your short-term, medium-term horizontals through here, which have sort of like supported the bulls sort of wanting to sort of buy it up. But if you break that, you've got the people that are trading this range, they're sort of giving up on it. They're sort of having their shorts hit, they're closing their longs, whatever. You're also getting this rising support sort of breaking as well. So I think certainly once we sort of get out of this area, I think this is going to really, you could sort of say, okay, yeah, we wait for a break of this lower support area down here. But for me, I would say almost this pretty much area through here. I'll put it down to the wick there. A little breakout box. For me, that's a consolidation that we're going to have to sort of see for a break in the next move. Downside, as I said, I just spoke about the targets, get down underneath this 103.90. I think we're going to see a big sort of meltdown. If we get up above the top side here, and look, it's no guarantee because, it is consolidating. It did manage to rally back up into the close. So, there obviously is some sort of buying effort sort of coming in there. Then upside of this for like dollar longs, you've got a couple of areas. Certainly this like pop up here to 104, 105.50. That'll sort of obviously sort of show a little bit of selling as we've seen previously back here. And then obviously then we're sort of looking probably more likely just to sort of come up to the highs up over here. So this would be your sort of top side targets in the short term for DXY. This one just a general sort of zone. I think that'd be a fairly decent area that you could say, look, it might sort of rally up here and then have another attempt at. If we do actually sort of break through and move to the top side here, then as you can see, we've got this large channel, and then we're going into wave 1, wave 2, wave 3, wave 4, and then I would say we've got one more wave, which would be our blow off sort of fifth leg higher, and I think that would be coming back in to retest these levels over here. I don't see a sort of a situation at the moment where US dollars all of a sudden going to catch a bid and really test yearly or multi-yearly highs. I mean anything's possible, of course, and if these things do start to break that way, well then that's the way you trade. We're going to be seeing sort of like the Fed come out with a very hawkish tone. We're going to see sort of gold sort of selling off further, and a number of things. Euro sort of probably pushing back down as well, I'd say. But at the moment, for me, it seems like this is still being respected in this sort of medium-term pullback. And certainly, if we can see that wick taken out to the bottom side, I'm going to be sort of tightening up and sort of moving a little bit harder on sort of dollar shorts. All right, so let's get out of this one for 1 sec. And move over here. Okay, and so we jump onto gold here. So yeah, look, as I said, so gold looked like it was rallying up, it was making an effort. This was a second effort, so it was really trying for a double bottom along this off this sort of 2330 area, which we've been sort of watching for the last week and a bit. But really, it got slammed down in the end of that session. So on the 4 hour, and you can see here, this is where it sort of broke through. That was that news that sort of came out, the PCE tipped into this little area where we've seen, the market was selling it from there just previously, and then it's just come right back down, bang, and really closing quite bearish right on the lows. So look, unable as of so far to go through there. Certainly, if we take out these wicks here, so taking out. Close. I would say if we take out these sort of wicks down there, then we are going to be seeing a crap and a break of this little zone here. We've got sort of like a bit of support around that 2300. It's a big round number, and then underneath that 2280. They're your sort of downside targets if you are looking short on this. It's hard to sort of say, like, because if we go back onto, I think it probably looks better on the, well, not necessarily better, but on a weekly candle like this, we can sort of see that sort of like, let's get this one off here for now. It would be better if this was at the end of a whole trend. But this, as I say, is almost like, as I said, a hanging man. So we know that there are some sort of parts of the market that are happy to buy. Like this isn't particularly a continuation looking candle. And, I've just, excuse me, I've inverted the chart here because sometimes it's easier to comprehend these candles when you see them in a certain light. But if you were trading this and were looking long, this would be a little hanging man, which is generally a turnaround signal. It's not necessarily a sort of a continuation candle. And you can see this a long wick. It'll probably be coming back here. So certainly, look, if we get above that wick, so let's put it back the right way, just so we know what we're talking about. If we get above that wick from last week, then, still in the game, 2400, 2412, these kind of areas, they're the sort of targets you're looking for. So let's just put this one on here as well. There's weekly wick highs. We know it's previous, whichever. So yes, I think they're the two real levels that you got to look for because the week was really choppy. It was I mean it held the support. It's come down quite hard, quite quickly. But look, as we saw, these obviously had a couple of hard weeks down here as well, and it's still fired back up. So it's no sort of guarantee that obviously that the whole game is over for gold. But certainly at the moment, I think a lot of the market was sort of positioned for this to go up, and of course, me myself included was calling like 2,500 as the way to go. We got to 2,450, and then sort of really once we broke 2,400 and that support, it just never came back. It didn't even have a retest of the underside. So if we go back onto a 4 hour, we can sort of see this area here. As I said, it broke through that 2,400. There's obviously a bunch of stops underneath here and didn't even really get a chance or an effort to sort of really come up and test the top side of this here. So we do, as you can see here on the 4 hour, we could say, look, we were having a little bit of a channel, or a potential sort of channel sort of coming through here. We certainly had this falling resistance coming down. It was respected all the way the top up here. It came in pretty much perfectly to sort of knock us down on the Wednesday from its first rally attempt. We've had the second rally attempt through there. And then obviously, as I've said a couple of times here, we've got that sort of sell down coming into the close. We have held, this is a fourth touch, 1, 2, 3, 4 touches of this sort of slightly sort of falling support. I'm not a big fan of this one here. It's just a line that seems to be quite significant. I drew it out when we were on this third touch here, and obviously then it was a place where it halted coming into the close of the week as well. So look, I would be reluctant to be sort of piling on shorts with gold here. You'd want to see a clear cut sort of break to the downside because as I said, look, it was rallying up always all through this period here as well, sort of coming into that data. The market was sort of hanging for that last bit of data, but obviously subsequently it sort of had a bit of a sort of smackdown at the end of it, and this would be that little falling resistance. So it's attempted the top side break of it here, but this is really this horizontal at 2360 is really sort of something to be wary of. And once we get above it, well, fine. Then you can sort of look at the higher levels. But really, it's at the moment, it's just consolidating. Look, consolidations generally favour the direction in which they came into. So it was a negative here. Consolidation would favour another sort of move to the downside. But as you can see, they've had a few attempts to break this through here. As of right now, obviously this just being the weekend, unable to do it. Again, it doesn't mean that they won't do it. Doesn't mean they won't do it Monday. Doesn't mean that it won't sort of just go bang, recover, and move back up to the top side here. But I think if you're going to short this is the time to short it. This is the time to short it. Coming into a support, which you've seen sort of respected time and time and time and time and time again, isn't necessarily the time to be adding your shorts on there. So if you see a break and push down underneath here, then okay, yeah, you can pile on for some shorts. You look for 2,300, you look for 2,280. They're obviously going to be areas where we're going to find at least another little buying support. But yeah, I think in the short term, I'll sort of wait to sort of see how Monday sort of fares. But I wouldn't be surprised if we do get a push back up and an attempt to break through this area here. I just can't see, except for a sort of technical reason, that we so drastically sold down from this point here, as obviously DXY was sort of rallying up after that as well. Okay, and flip on Aussie. Aussie's actually sort of faring not too badly through this little area. So came back down here, double bottom. It is sort of coming back up to this top side here. Same sort of thing. It did get smacked down, but obviously it sort of held a little bit better than DXY did. DXY, sorry, than gold did on that little sort of push down. So it's certainly still keeping itself up in this top area here. We have got a little bit of a sort of consolidation with it sort of happening here as well. If we put it onto a daily, we can see that it's pretty much got a little zone through here. So you could probably just take this one and whack this across here. I think that's the area. Like the wicks are fine, but obviously you want to see that close out the top side. Let's drag this just through here. Yeah, you'd want to see. Oh, yeah, you'd want to sort of see a close above 66.60 to sort of really signify that, okay, you're going to come back up here, and this is those 67 sort of resistance area,
which we know is a round number. Look, this area we knew was going to be pretty tough, just based on this sort of price action back at the start of the year. And we're seeing it obviously play its part here a little bit as well, knocked it back down. But if they want to sort of sell this all the way back down, you've seen how hard they sell these parts down when they do. Aussie could very well have just done double and then being back down, low 65s into the 64s. But they found what they needed and they sort of got the buying to sort of hold this support area on 66 or 60, 65, 90s. So I would say that we're seeing the RSI sort of flatten out here a little bit as well. So I wouldn't be surprised if we do get a bit of a push up, at least enough to test the 67 area. For the bulls, certainly above 67, I think that's an area that's going to be very vital. If we get a close up around here, I'd be pretty sort of nervous if I was short on it all. 67.40s, 67.30s, they're going to be your big breakout areas. And alternatively, if you're looking for downside moves, we've seen that this is quite a strong area. If price comes back down here and doesn't respect the 66 area, then I would be reluctant to sort of think that this low 60, mid 65 is going to hold much. But that's certainly your last line of defense. You go underneath 65.70, particularly with a close on a 4 hour or higher, then you're looking back down 67s, and that's pretty much just putting Aussie back to sleep for a little bit. But for now, we've seen that big break off the lows. It is more or less really just sort of consolidating through the zone here. We do have some major channel resistance, sort of falling resistance, which goes back quite a long time. So I think there's quite a few things, and this is the same thing that I was saying with DXY. You're getting a confluence, you're getting the horizontals, plus you're getting like this, in this case, it's a falling resistance. Opposite for DXY is that sort of rising support. If they both give way, they'll both give way at the same time, and you'll get that cross-chart confluence, and then we're going to start to be looking up around those 68s. I think I'm still looking long with Aussie in the sense that I think that we're going to be sort of testing 6800s in the sort of over the next sort of maybe month or so. Okay, flip across quickly with copper, and copper seems to be breaking to the downside here quite strong. So let's put on back on the 4 hour. So this was a thought with with copper that I thought we may have got a little bit more of a push up before sort of coming back down to these lows down here. But as you can see, it is still supporting, sort of respecting this area of the chart quite well. Look, it's like all the metals, they're all sort of coming off a little bit here at the moment, but I don't think it's anything really sort of super to sort of say, okay, yep, that whole run's over. Certainly, this is, as you can see, this is your drop down here. We've popped up the top over here. It only got to the 38% of the retracement of that drop down, and then bang, slap down again. There's a lot of profit on the table from copper being on a 30% run in the last 3 months. So, it's bound to sort of see some pretty sort of fast drop downs. I do think that this is potentially still what I'm happy to be looking for, sort of like a bit more of a sort of consolidation period around through here, and then at least another run up towards the highs. So above sort of, this is still quite an area that I would like to sort of see price get back up above, that sort of 75.5. I think if we can sort of get up above here, you're back into this little sort of consolidation here. It's not necessarily just going to cut straight up like this. That was just for, talking point kind of thing. But we're seeing it on, this is on the 4 hour, very heavily sort of oversold. It is trying to sort of tip up, just coming into the close there. We've got a little bit of this wedge pattern happening. I would say definitely you will get this kind of move through here to come up and test this falling resistance. I don't, as I said, like this, I don't think it's going to go through straight away, but some more sort of consolidation, and then maybe potentially sort of, later in the week, NFP, maybe coming through into the next week, FOMC, around this kind of periods here, we could see a bit of a break. But first things first, to get through this sort of falling resistance, this little horizontal at keep forgetting what I'm on, 4.73. I think above there we could certainly see a little bit more of a sort of recovery break to the top side. Downside thoughts with this one though, we've still got this big rising support, which it hasn't touched up for quite some time. It moved off it from back in sort of early mid-March. So I'd say sort of if you're moving to the downside here, you've got strong horizontals, you've got the rising support. Again, I think if you wanted to short this, the time to short it was punching into all new time highs or whatever, but or even a little break of this zone down here. I'd be sort of, again, reluctant to sort of really short too much down here. just after you've had these two big sort of drop downs. We could potentially be looking for something along these lines here, which would be a move like this with a little bit of a bear flag through here. And this measured move brings us pretty much in line with these sort of supports where we've seen the buying sort of come in previously. So downside target, as I keep saying, I think this rising support, these horizontals, this will be definitely a buy zone through here if we do get a chance to get down here. So just whack this, call this buys. Bang. If we get a shot to buy down at sort of 4.45, I'd expect this to be sort of moving up. But again, I still think that we're potentially going to get a little bit of a rally through here. I think US dollar is going to sort of break to the downside, and I think we're going to see another little sort of push on with a few of these metals as well. And finally, we'll have a look at China. So yuan has it did get that big sort of breakdown from that sort of price point, that price target that we had. But this thing sort of definitely, it just refuses to kind of die. It did sort of respect these little zones that we had out through here. These aren't anything major. As you can see, this is just part of that grind on the way up there. And, we saw US dollar buying coming into the close of the week. And as you can see, well, we've got a little bit of it happening with the yuan here as well. To me, though, I think that sort of, you've got the price target, you've broken down. It's hard to sort of say because obviously this has just been on such a grind this whole way coming through here. If you take out those highs up there, well, you've got the sort of next zone at 728, but that's your major breakout level. So if we go past that, I wouldn't be surprised if you start to see people talking about a bit more of the PBOC intervention sort of coming on over there. But certainly for the moment, it's a bit of a tough one. We're really back into this range. And this is what I've said about it, about the yuan constantly. For the most part, it is a fairly stable currency. I mean, yes, it's that up and down through here, but it's more or less just chugging along sideways. Bit of a double shakeout, and then back into this along here as well. So, I don't see any sort of major breaks necessarily coming to the top side or down. I would say potentially, maybe a little push up early, and then something to this effect. Moving forward, back basically what we saw similar to this area through here through March, where it's not really a massive zone. It's like 0.5% or something. Yeah, so it's like 0.62% through a couple of weeks. And yes, we did get that little shakeout, and it grinded its way all the way back up into it again. But when the currency's only moving 0.5% up and down sideways through a range for like whatever this was, a couple of weeks, month or something. It's not the most fun thing to sort of really trade, but certainly you put your sort of alerts either side of it all, and once you get those breaks, as you can see the size of this move here, when it breaks, it'll move. It's not necessarily one that you're going to hold all the way through, of course, as we can see, but that's the time to sort of trade it. For the most part, when this thing's just going up and down within half a zone, well, you check it, you see if it's broken yet. No, it hasn't. All right, we'll come back to it tomorrow, or wait to put the alerts on and set the alerts for it all. And have a look, just a little fun one with silver. Yeah, because silver is right back down here, sort of with these supports. So again, this is what I'm saying. That sort of like it's metals have been under a little bit of pressure, but they're still holding where they need to hold. I mean, that's an ugly candle. That's like one of the biggest bear candles we've seen in a very long time for silver. And it came very quickly from a push where to get up to 31.77 down to, that's 150 points in, these are like 4-hour candles. So, a few hours, half a session, and it's dropped 150 points. But as you can see, it's really just consolidating. So if we pop this through here, I mean, you can see with the two zones anyway, and this is what we're seeing as you go sort of chart to chart to chart, you start to see that it's all kind of doing a little bit of this. I mean, like DXY is, it's almost down, almost breaks up, almost breaks down, but then it sort of rallies where it needs to. Gold, looking pretty ugly, I'll admit, from that sort of move down, but at the same time, it held where it needed to hold. And as you can see with silver right here. it's holding these supports. So, if you want to short this, that's fine, but I would sort of, again, be reluctant to short it coming into a support. So you sort of set your alerts underneath it. These are your previous weekly highs, as we got marked out here, and I'm talking sort of going way back, you know, further than I can be bothered sort of looking on this chart right now. But really, if till you break to the bottom side here, I'm not saying that you can't, but till you break to the bottom side here, you'd want to be sort of shorting it from a little bit higher, up around that sort of 31.50s or so. If we see gold break, no doubt we're going to see silver break as well. I'll flick across quickly, just with this gold-silver ratio, and this is what I was saying, sort of, I covered this, I actually did a video on it sort of midweek as well, that we're starting to see a bit of a push up in the gold-silver ratio. So look, with this, it just means that basically when the money is going to be flowing into the metals market, who's going to be sort of the driving force, the dominant one? And as you can see here, for quite a while and quite sort of aggressively through all of May, silver has been absolutely dominating this, really pushing this chart down here. So it means that when money's coming into the market and people are also going to be trading, precious metals, so to say, when, US dollars selling off or for whatever reason the money's coming into the market, who are they going to sort of be sort of pushing it more towards? And, the last 2 days of last week, we saw that shift. We saw that gold was actually moving vaguely up, while silver was really sort of lagging at the lows. So if you're going to be putting money into the sort of gold market, I would say at the moment, gold obviously in at least the short term seems to be the sort of predominant one. Once we get above this level here, you might see actually a lot more sort of flood back into gold, and maybe this will be around the time that we see gold revisiting those sort of 2500s. But gold has really been trading very heavy since it's been coming from that drop down. But as you can see, it's been pretty much sideways through this area, sort of going back to, well, May 22. So, excuse me, a couple of years now, being sort of actually just into sort of June 24. So yeah, it's an interesting one, this one here. Look, I don't think we're probably about to break down underneath this. This yellow line here is sort of like literally a, I think 13 year rising support. A break under this will be very interesting. That's something that's really going to get silver flying. Well, when the metals do get moving. But for now, seems like sort of like gold might be a little bit more of the favourable one. We are coming into a little bit of a resistance through here, so we'll have to sort of see how this one plays out. But for now, sort of we've just got to see the metals actually sort of catch a bid and hold it. So yes, anyway, this is what we've had sort of coming through this week here. No, sorry, one last one. We see a little bit of a negative divergence on this one here as well. Look, I'm not a big one not a big one, but I'm not too afraid with the technicals of this particular ratio chart. But it is just something, obviously, if you watch what I do, negative divergence are my sort of bread and butter for bottoms. So yeah, we'll have to see how that plays out. ADP on Wednesday. So if we bear with us 2 seconds. Okay, so what have we got coming up? So we've got, Caxton manufacturing PMI for China on the Monday morning. So we did have that China data that came out midweek, or sorry, towards the end of last week. I think maybe on the Friday it was even, which came in a little bit weaker, which would stand to reason because as you see, you've seen copper sort of coming off a little bit more if you want to sort of connect the two there. Not a great deal, bit of manufacturing PMIs from everybody around. We got ISM on the Tuesdays, or kind of Monday night, depending where you're sort of coming from. And where are we at here? There we go. So yes, here we go. We got sort of jolts coming in. Jolts tipped to be slightly down. Looking lower print on this one. Obviously, less jobs available. It's not necessarily a strong sign for the economy. So you could see a little bit of dollar weakness off this one. Here we actually have quite a lot of Aussie data coming through here. We got GDP Wednesday morning. Where we got that's tipped to stay mainly flat quarter on quarter, and then a slight slowdown on year on year. Again, not going to be a super strong mover for Aussie if that is the case. But the big ones that are really going to move the market this week, we've got ISM PMI data coming out Thursday. We should also have, where are we at? China data Friday. No, look, I think pretty much ADP and then NFP are going to be the big ones for us. So we're seeing, as we see here, a slight tick up in NFP. I mean, 5,180 is still a pretty low number. If you can get like these big shocker ones that'll come up a sort of high 200s, then you can sort of start to see US dollar really sort of catch a bid. If you get these lower numbers here, again, I don't think it's going to be super positive for the USD. So yeah, we'll see how we go. All right, that's it from me.